So, folks, today for Things I Like, one of the things that I like are our sponsors here at the Ben Shapiro Show. Obviously, in chaotic times, we rely a lot on our sponsors, and we ask that you patronize our sponsors. But the folks over at Birch Gold Group are some of the most trustworthy people I know, and they are very trustworthy, obviously, when it comes to diversification and putting some of your money into precious metals. Joining us on the line is Philip Patrick, precious metals specialist for Birch Gold Group. Phil, thanks so much for joining the show. Really appreciate it.
Thank you for having me, Ben. Thank you.
So let's start off with a quick market analysis. Obviously, the coronavirus has absolutely tanked the market. That's not a shock. It's an exogenous shock to the market. Plus, the governments around the world are basically shutting down nearly every business. People are being told to stay home. But are there underlying market fundamentals that we should have been concerned about even before this with regard to the economy?
The answer is yes, and you and I have discussed this, I think, in the past. But the issues that we have today in the markets, I think, certainly predate the coronavirus. We've been at the longest bull run in market history, and we've been there for really the last 10 months or so. So I think timing for a while now has suggested corrections on the cards. The bubble, really, I would say, has been fueled over the last 11 years, really by policy, right? Low interest rates, pumping money through the markets through quantitative easing, corporate buybacks at the highest levels in history. What I will say about the coronavirus is, look, if you'd asked me at the beginning of the year when I felt the markets would correct, my feeling was later in the year, right? Third or fourth quarter. What I think it's done is acted as a black swan, if you will, this unforeseen event, and essentially become a catalyst. I think it's pulled the time frames forward, and I think ultimately exacerbated the issue. And for me, this is really, really important. I think what's happened is we've turned from a financial crisis to an economic crisis. 2008 was clearly a financial crisis, right? And what happened? The government stimulated, right? Pumped money through the markets, dropped interest rates, and it ultimately pulled us out. We've tried that today. I mean, the Fed just pumped a ton of money through the markets, biggest rate cut since 2008. It had no effect. The market kept spiraling down. This has really become an economic crisis, and I think it's fairly obvious, right? You left your house in 2008, people were spending. They were in bars and coffee shops and restaurants. Today, it's a ghost town here in the United States and globally. That significantly exacerbates the issue, right? It millions of jobs are at risk, people not spending. It creates a major, major issue.
We're speaking with Phil Patrick. Title is Precious Metals Specialist for Birch Gold Group. So, Phil, where do you think stocks go from here? There's sort of a consensus that the bottom has not been found yet, although who the hell knows? Because I thought the bottom was at 23,000. Now it's been dropping below 20,000. It's bouncing around 1,500, 2,000 points a day. It's really difficult to tell where the bottom of the market is, and to tell people to buy stock in a volatile market is always a difficult thing. So where do you think the stock market is going?
Yeah, I mean, you hit the nail on the head. It's very, very difficult to predict because, quite frankly, we haven't been in this territory at least for 100 years, I would say. So it's tough to predict. What I can say is, just looking at things, this could potentially be the tip of the iceberg. We look at the '08 crash, right? Back then, at its high point, the Dow dropped 50%. We're down today roughly from the highs about 30%. So what that tells me is this matches what we saw back in 2008. There's potentially another 20% downside. My concern, however, is this could be, and we sort of addressed this a moment ago, but it could be much, much worse than 2008. And something I look at, and I think I've mentioned before on the show, is cyclically adjusted PE ratios, price to earnings ratios. Even with the downside that we've seen, the cyclically adjusted price to earning ratio is roughly about 23 today. The historical average sits at about 16. What that means is if we just go to an average multiple in the markets, it puts us down 31% from where we are today. And that's just an average. In theory, depending on how bad this gets, how long it takes us to get out of this, it could be much, much worse. And to reiterate a point, what tools do we have available? We've shot our bullets and they're not working. We don't have the same tools to pull us out like we did back in '08. Will this be a 3 to 5 year recovery like we saw back in '08? Or will it be a 25-year recovery like we saw during the Great Depression? The answer is nobody knows, but it doesn't look good.
So, Phil, where do you see gold prices going from here? Conversely, obviously, as the market sinks, a lot of people have been looking for a safe haven in gold. Where do you see the gold price going?
Look, right now, I think pricing is still relatively low, right? Everyone looks shorter term, but I think you've got to pull it back. Gold today in the $1,400 range. Back in 2011, so after the '08 crash, gold and silver went on a bull run and they hit their peaks in 2011. Gold back then was trading close to, it was in the mid to high $1,900 range. We're at $1,400 today, or in the $1,400 range. Silver today in the $12 range, it was $48 back then. The point being, we're significantly down from our all-time highs. There's a lot of value there. Citigroup are one that have predicted gold could hit $2,000 an ounce as soon as the next 12 months. It feels like we're heading towards that. I think we've got a long way to go from here.
So with all of the chaos, what exactly have been the last 2 weeks at Birch Gold Group? I have to imagine that it's been rather chaotic.
Yeah, that's the perfect word, chaotic to say the least. Look, as a company, given the climate, we've had our best month on record, and we're already there, and we're not even at the end of the month. Just from an individual standpoint, it's been absolutely crazy. The ones I feel sorry for are the processors in our IRA department. They're non-stop, and actually we're hitting the other end. Fidelity, Charles Schwab, the companies that we're helping to roll funds over from, their hold times are an hour and a half right now. So I think a lot of people are I think it's craziness all over. It's not just us. The big institutions are getting hit. People are trying to pull their money out, and it's rough, but I can't complain.
Well, we really appreciate your time, Philip Patrick, Birch Gold Group. He's precious metals specialist. As you know, Birch Gold is a sponsor of the program. Make no bones about that. They're the people I would trust with precious metals investing. I'm not somebody who says liquidate all of your stock holdings, but if you've got money lying around, you're looking to invest, you would want to diversify. It would have been good to do so, a couple of months ago. Text Ben to 474747 today. See how simple and straightforward these moves can be for you. Get all of your questions answered. Phil, thanks so much for your time.
Thank you for having me. Thanks, Ben.